Welcome everyone, thank you for joining me as always on the Laud Invests channel. Today we'll be having a look at Anglo Pacific Group PLC, ticker symbol APF, a major natural resources royalties business. Now, what does that mean? It's very important to understand that they aren't exactly a mining firm. What they are is they're a royalties and streaming business, which means, mines can be a little strapped for cash because of the way commodity prices go up and down. And so Anglo Pacific kind of fund these cash-strapped mines, and in return, they get some of the value that the mine produces and the resources that they get. So, getting that out of the way, let's continue on here to their stock price. So, if we go from the max all the way from 1993 to the point that I was born in 1998, not much was happening with them. Then they had a good wee rise right to the financial crash. Boom, stock price drops. Again, continues up. 2014 to 2016 wasn't that great for them either, to which we will drop it down to the last 5 years. Of course, again, February, March, price drops again due to perhaps a global pandemic, and recovered somewhat into May, dropping again, but has been on the recovery, and in the last year is actually up 21%. Now, this was suggested by a subscriber for me to have a look at, and it's been a very interesting look into a company that I didn't know existed, and B, I didn't even know these types of companies existed, which is quite the thing. Their dividend yield sits at a modest 4.29%, market cap 421 million, with a PE ratio of 3.28. Now, continuing on with a wee wiki description of them, the company, together with its subsidiaries, engage in secure natural resource royalties by acquisition through investing in mining and exploration. Currently, they have 10, but now it's 12 employees as of 2022. And they've a few subsidiaries such as Gordon Resources Limited and a few other ones. Headquartered in London, we're going to jump on over to their website. They've got a nice moving website, lots of massively open, mad-looking landscapes and rivers, and it's quite pretty to say the least. We can have a look at their About Us, and then we'll jump on over to their portfolio. So again, as I was saying, they have an investment strategy where they try and, acquisition, so they try and take over mines that maybe aren't doing too well, or support mines that are just down on hard times, and then investing in those mines and other ones in order to get a return for their shareholders. Their purpose: financing investment, natural resources. Again, it's an industry that everyone that probably has seen a few of my UK dividend portfolios, that with Rio and BHP and mining firms in general, now they are proper mining firms that get, take the stuff out of the ground, and that is their business. Anglo Pacific are more of a finance for other mines to do that work for them, essentially. They probably aren't actually on the ground doing anything. In fact, I know they're not. They're just investing. Commodity prices go up and down, so it's a company that you have to have a good long-term look on it. Now, don't get me wrong, natural resources in the long term, fantastic investment. My personal opinion, none of this is financial advice, of course, but again, certain companies, do you invest in the actual miners themselves, like BHP or Rio, or would you feel safer investing in a company like Anglo Pacific that actually goes in and acquires these mines and invests in them? Things to consider when you're having a wee look here. Let's jump on over to their portfolio. One of my favourite things to have we look at here. Now, what do they produce? We'll start from the top here. They have 19 royalty and streaming related assets across 5 continents, providing diversified commodity exposure. They're in 99% of the portfolio, which I don't know how they get a percent out of 19, but regardless, they're in well-established mining jurisdictions, so it's not some new area or an area that hasn't seen mining, for at least a generation, I'd imagine. Base metals, 71%. Base metals are, of course, all the common ones. So you're talking about the likes of copper, lead, zinc, nickel, all them. Vanadium and uranium are the next two. They are primarily used in nuclear reactors. I know vanadium is used for quite a few of the things in uranium, obviously, for the fuel sources. They're used in other things, but that is a primary use of both. 42% is in North America, 30% in South, 25% is in Australia. These are all percents, by the way, in case you were wondering. They do not have 4 uranium mines and 71 base metal mines, just so you know. 66% are producing, so they're active working mines. 31% are in development, so exploration, essentially. As I said, clearly 30% of their portfolio is future mines, and obviously funding the exploration and establishment of those, to which 3% are early stage, so they've obviously found a site for a new mine and they are beginning that. Looking at the map here, you can see they have McLean Lake Mill, that's uranium mine in Canada. Oh, I thought I had it opened actually, but I'll open it here now. We can have a wee look at it. World-class mine located in the Athabasca Basin, Saskatchewan, Canada. I know I pronounced that word, but I cannot pronounce that word. We uranium mine, so gives you a bit of an idea. I actually want to have a look at a few of the other ones. A few in Australia. Let's see, assets. So we've got a cobalt mine, we've got a copper mine, vanadium, iron ore, uranium, gold, copper, silver, uranium, coking coal, and copper. What's in development here? So their development is a copper nickel mine, a copper and cobalt, nickel and cobalt, uranium, copper, no lithium or anything like that. What are the early stages of? Copper, iron ore, calcium carbonate, gold. Okay. Right, well, as you can see, very vast array of commodities, which means they have an even bigger, more vast array of prices going up and down. I don't think every metal follows the same trend. Obviously, it doesn't. Demand grows and shrinks for different ones. Let's go on to Mantos Blancos, copper mine. Where are you based? Is that like Chile? Looks like Chile. It is Chile. There we go. They acquired a 1.5% smelter return royalty for 50 million. Woo! 50 million for 1.5%. That'll be interesting to see a deeper dive into that one. 4 Mile uranium mine in South Australia near Adelaide. There we go. They have a 1% life of mine royalty. Life of mine for 1%. Wonder what they bought that for. Doesn't actually say. But let's see. Outlook. Let's see. With the uranium currently trading in the mid $50 per pound range, which is higher than the average, to generate the group's royalty. Okay. We anticipate income in 2022 to be at least matched or improved. Right, and there was McLean. I knew I did have it opened at one stage. This is the reinvestor section of the website. Let's see if they can convince us on their company. Anglo Pacific has successfully executed on its strategy to build a diversified royalty and streaming portfolio with a focus on commodities that support a more sustainable world. So obviously, because they're going more on the royalty and streaming, so they just want a return on the mine for helping them out with financials. They obviously don't have to have any involvement in the day-to-day mining. And you can somewhat see a bit of protection because they have so many different types of commodities. Just something to consider. They are trading currently at £1.63, 163 pence, about $2 and a bit, $2.10, I think, if you were to convert it over now. Though the pound to euro or the pound to dollar rate is a little off, so I probably should stop doing the converting because all these videos may be completely wrong within a few months. Over to Simply Wall Street, where they actually give decent valuation, an alright dividend, alright company health, alright company passing. Nothing blows it out of the water. They give a 0 out of 6 in future growth, but future growth is so, I don't know where Simply Wall Street pulls it for some of the UK companies. Like, it makes so much sense where they get the growth charts for the US companies, but the UK ones, always take that section with a pinch of salt. I'll obviously do my due diligence as best I can for you in these videos, but obviously doing a bit of research around the side, and I'll try my best to give you the best answer that I can, because their forecast is to decline by 50% in the next 3 years, but I don't know where that's coming from. Obviously, commodity prices have kind of blown through the roof, so unless it's linked to that, but I don't see it being that massive a drop because it is, as they said, it is quite diversified. Let's see. Currently trading 38% below its estimated value, and it became profitable just this year. There you go. Okay, so compared to like the likes of Ferroexpo as a competitor and Novo Lips Pets Steel, it sits at 3.9. Now their competitors there, I'm near sure these two actually own mines and do the mining. Could be wrong in that, but again, things to consider. Always be asking lots of questions. It's the best thing you can do if you're ever looking into any company. Ask as many questions as you can when you're looking at information. And yeah. So fair value £2.63, trading currently at £1.63. Okay. Future growth, and yeah, see, we will look into the past, but for the future here, it looks good into 2022 and then gone, just demolished. I don't know why that's the case, but you can see commodity prices. Well, actually, the more I look at it, maybe the analysts aren't that wrong. Commodity prices are very volatile, very, very volatile. So let's go to past performance. As you can see, they were losing in 2016. Profit margin was pretty high through 2016 all the way to 2019. Again, dropping into a loss in 2020. And boom, just like Rio Tinto and BHP, commodity prices through the roof to the top floor and beyond. And here we are with a very tidy profit margin. Let's look. Financial health. Okay. Assets to liabilities, grand. Assets to liabilities, long term, also grand. Nothing here's too out of the blue. On to dividends now. They don't have that high a dividend for a mining firm. I suppose it is a wee bit different because they pick up royalties, but this year their profits are through the roof, and they haven't given out. They might give out a special dividend. That's another thing. You never quite know when a company's going to give out a special dividend. So maybe because they had so much cash flow this year, they might invest an awful lot of it, which for long term is good for any company, or they might consider giving it back in the form of special dividend. Again, you never quite know. Cash payout this year is only 17%. So they do have a lot of cash flow retained. And let's see, who do they own? I'm going to say BlackRock and Vanguard is probably... insider trading. One individual sold nearly 1.6 million shares worth 2.2 million. Wow. That's always something to have a look at. You never quite know why insiders sold so much 6 to 9 months ago. Might be worth looking at. See, I always love a company where I just see this screen, buy, because then obviously whoever is inside the company clearly has a lot of faith in them. But when there's massive sell-offs or just general sell-offs, questions need to be raised. Institutions own 63%, public companies 17%, general public 16%. And wow, this is one of the first companies that I have not seen Vanguard and or BlackRock in the top. Surely there's somewhere. No, nowhere to be seen. There we go. Strange that. But there is Schroeder Investment Management. Jumping over to one of my favourite websites, we're on to Trading 212 for Anglo Pacific Group. For any newcomers, always love to explain here. The dividend summary, it'll explain when the next dividend will go X. X is down here. X dividend date means the date that you must own the share in order to be entitled to the payment for owning the share for the dividend. You get that on the payment date or a day or two after. Declaration date, that is the date that they declare when the X dividend and the pay date is and how much it will be. It'll also tell you the previous one. It'll tell you when that went to X and when it was paid. So this one was paid 2 days ago. And they pay 4 dividends per year, excluding specials, which means they are a quarterly dividend payer. If you had 100 shares, you would got a payment of £1.75 and £1.75 for the next one. So as you can see, they aren't growing it so much. Again, as we can see, it goes up and it goes down and it goes up and it goes down. They are at least, I'll give them this, they are a consistent dividend payer. I don't see, did they skip 2020 through the pandemic? No, they went on to pay during the pandemic, and they went on to pay, they've been paying at least they've been consistent in paying from the likes of 2014 onwards. So that's a positive. I'll give them a positive. I don't think they'll be joining my dividend portfolio simply because of the volatility. I have Rio, and I've already grappled as to why I have Rio from time to time. But I do want a company in the mining industry. That is not to take away from the fact this could potentially, going into the future, be a fantastic pickup. Again, when commodity prices rise, you'll be in for a tidy sum. Maybe the dividend price or the share price right now isn't too bad. Let's jump on over to Trading212, the brokerage account that I use. I always have the affiliate link in the description below if you want a free share and you want to sign up to Trading212. It's always there. And I have links to the the investor relations for Anglo Pacific Group, and I have their ticker symbol and their dividend yield all down in the description for you, and all the tools that I can give you. Because at the end of the day, I provide as much information, entertainment, and everything I can for you. And then on top of that, all the resources that you could need to hopefully help you in your investing journey. From a high of, £1.90, and now it's £1.64, maybe it would have been a fantastic opportunity. Obviously, if you had the magic, the magic oracle ball, you could have knew that in July 4th, it was the lowest it would be for a while, and you could have picked it up there. Maybe this is still a good time. All things to consider. Let's see. Yeah. So revenues just follow the commodity prices. That's just the way it is. Total assets has grown over the years. And then operating cash flow, again, very, very difficult to track. They did spend a lot on investing, though. Capital expenditures. I don't mind seeing cash used for investing activity, I must say. It actually is a nice thing to see. But yeah, that is the Anglo Pacific Group done and dusted, lads. Let me know what you think in the description below. Is it a company you'd add to your own portfolio? Are there other companies you'd like to see me do videos on? Or just general questions? I'm always up for chatting in the comments section, so never be afraid to drop one into it. And I'll speak to you all very soon. Thank you for joining me. I'll see you in the next one. Bye-bye.